everyone, I'm Gabrielle and welcome to my channel. Today I'm going to talk to you about the 5 things buyers can do before they even start their home search. The reason why I think that these things are so important to do is because honestly, they are going to make the process so much smoother and you're really going to set yourself up for success going into the home search. Number 1, talking with an agent. It's really never too early to engage with an agent, and the right real estate agent is not going to make you feel pressured to move. One of the reasons why I think it's so important to connect with a real estate agent early on is because 1, they're going to be able to answer any questions you might have up front about your home search and provide you with some clarity before you step into this process. And also, they should be able to connect you to resources that you might need to start this process and also just make it smoother for you. What I mean by that is they might have loan officers to help you get pre-approved that they could recommend. They can tell you a bit more about neighborhoods. They could connect you with people who live in certain neighborhoods. They could provide more information on schools. There's so much that they should be able to help you with. So engaging with them early on is only gonna help you. For me, I love meeting with people early on. It doesn't matter how early you are in the process, even if you're a year out from buying. Most importantly, to get to know you either as an individual, as partners, or as a family, understanding what your needs are up front so that I can better serve you. I also like to provide you with a buyer's packet that really explains in detail the process and what our market is like. I'll also typically provide you with the documents of writing an offer. Again, it's not to scare you, but I don't want the first time you write an offer to be the first time you actually see offer documents. You should be able to review those in advance to really get comfortable with them. And then also information that might be helpful, like a metro system map. Living in DC, oftentimes people like to live near a metro or they'll take that to commute. Information on particular neighborhoods or schools. It really just depends on the situation and how much I know about my clients in advance. The second thing I'd suggest is finding out how much purchasing power you have by getting pre-approved. Before I get into why this is important, I want to quickly explain the difference between getting pre-approved and getting pre-qualified. Getting pre-approved is the strongest form of finding out your purchasing power. It requires a little bit more work on your end up front in terms of submitting information on your financials and your work. Getting pre-qualified is typically what larger bank institutions will do. It's actually a bit risky because they're not even running your credit. Oftentimes I've heard stories from my buyers that they walked into their bank, they talked to them for 5 minutes and they came out pre-approved for $900,000. That's just not realistic, and that's really not how things are done when the process actually does start. What you really want to aim for is getting pre-approved. It might take a little more effort from your end up front, submitting documentation on past work history, pay stubs, your financial information, assets. A lot of that stuff will just need to be submitted to the loan officer. They'll take all that information, process it. They'll also look at your credit score and they will run your credit. And they're essentially using that to approve your file in advance of you even submitting an offer so that you don't have to worry about your loan falling through once you're already under contract and found your dream home. Also, if you're in a market like DC, it's actually required for me to submit your offer with a pre-approval letter, not a pre-qualification letter. So one of the reasons why I think it's important to get pre-approved up front, a lot of times you'll hear in a hot market, agents won't even show you a home unless you are pre-approved because they want to know that you're serious. For me, to be honest, I show a lot of my clients homes before they're pre-approved. I think there's some validity in trusting one another. So let's get back to why it's important to get pre-approved. Oftentimes in a hot market, you'll meet with agents who actually require you to get pre-approved before they'll even show you a home. To be honest, I'm not that strict with my clients. I actually think the reason why you should get pre-approved up front is because oftentimes, even if I meet with clients who are like, yeah, we're not really gonna buy right now. We're just sort of looking, maybe we'll buy in like the next 3 to 6 months. They get excited about the process after we talk and they talk to friends, they start going to open houses, and before you know it, I get a phone call from them after they just got out of an open house and they're like, Gabrielle, we found the home of our dreams. We wanna write an offer, and it's gonna actually take 2 or 3 days to get pre-approved, and they could miss out on the home of their dreams. I can't tell you how many times this has happened. So that's why I suggest getting pre-approved up front. It's good for about 6 months. So even if you aren't looking to purchase until 5 months out, you've already got that lined up. And again, if you're in a hot market, homes sell within the first 2-3 days they're on the market. So getting pre-approved up front honestly gives you the power, knowing that you can walk into any open house and buy that home the day of if you fall in love. Also, for your awareness, if you are working with a loan officer who's specific to your geography, once you're pre-approved with them, that's typically good for about 6 months. So even if you're not looking to purchase immediately, it gives you the flexibility to at least have that power for 6 months. And then if 6 months rolls by and you're still searching, you'll just re-up that with them. One major tip that I tell all of my clients up front is that they can save money shopping for lenders before they even talk about purchase price. And here's how you can do it. In a hot market, you'll find that sellers do not want to work with buyers who are going to use a large bank. There are many reasons for this, but typically they just have a bad stigma. They also generally work only 9 to 5, Monday through Friday, and oftentimes you'll find that you're searching for a house either at night after work or on weekends when banks are closed. So if you need them to write an offer immediately, they're not going to be available. But I think that they're a great place to start. Within a 30-day period, you can talk to up to 3 lenders because they're going to run your credit 3 times. It's only going to pull a soft pull on your credit once because creditors know that you're only going to be getting 1 mortgage. So with that said, banks typically have super low rates. And I always suggest to my clients that if they want to shop around and get the best interest rate, they should go talk to their bank first. And again, the reason for that is because, like I said before, it's not going to take that much time to get a pre-qual with them, pre-qualification. And also, you're probably going to get a really good interest rate from them. Then go talk to a local loan officer, whether this is going to be someone that your agent recommends, you might have friends who loved someone they used, whoever this is going to be, you're going to take the quote from your bank and go talk to that local loan officer and say to them, hey, can you beat this? And that's their opportunity to come back to you and say, yeah, we actually can. And then just like that, you've saved like $500 in interest from your monthly payment. And one of the reasons why it is beneficial for you to work with a local loan officer is because they're working 24/7. They're not on salary, right? Like they are not getting paid unless this goes through. So they're gonna work to no end until your loan is approved and the transaction has gone through smoothly. They also understand your market and the pace at which it moves. So they know, like if you're in a fast market, they're gonna know, okay, so-and-so's going out on Saturday. I need to be available in case they want to put an offer in because I need to help them succeed. The third tip I have for you is understanding the costs that come with purchasing a home. If you have a good real estate agent, they're going to make you aware of these costs the first time you meet, if not before. Closing costs are typically different in every market, and for DC, they're usually around 3 to 3.5% of the sales price. For buyers, you don't pay a commission to your buyer's agent, so that 3 to 3.5% primarily includes fees and taxes. And once you're connected with a good loan officer, they'll take you through line by line to explain every fee and every tax you're being charged. So just so you know, in addition to your down payment, you're going to have closing costs, and those closing costs will not be paid until the day of settlement and the day that you get the keys to the home. The fourth tip I'd suggest is looking into some of the loan programs in your area, and specifically for first-time home buyers, looking at what first-time home buyer loan programs are available to you. It's also an added benefit of working with a local lender because every mortgage brokerage will have different programs that they can offer you. So it might make sense to actually talk to 2 or 3 local lenders to really get a sense and make a decision on what loan program works best for you. In the DC real estate market, we have a number of programs and credits that first-time homebuyers can benefit from. One of those being the DC first-time homebuyer tax credit, which will save you about 1.45% from your closing costs, as well as a number of different first-time homebuyer loan programs. So talking to your local loan officer up front is going to provide clarity on what programs you qualify for. And number 5, decide on a comfortable monthly payment. The reason I suggest this is because oftentimes we don't want to be house poor, right? Like we might have enough money to get pre-approved for, let's say, $750,000, but that would mean that we're not going to be able to go on vacation. We're not going to be able to go out to dinners weekly. We're just going to have to scale back on our lifestyle to afford a bit more home. So giving your lender an idea up front of what you want to spend per month will help them provide you with a comfortable price range that you should stay within if you want to keep that monthly payment. So for example, I'm pre-approved for up to $750,000, but that would mean I'm going to spend $5,000 a month on my mortgage payment, and I really want to be somewhere closer to $3,500. So with that said, maybe it's best for me to look in the range of $500,000 to $600,000 because that's going to keep me in a comfortable monthly payment that I'm okay with paying. After you do all these 5 things, you are set up for success and you are ready to start your search. And that's it. Thank you all so much for tuning in. Don't forget to hit subscribe and tune in next week to check out my latest video.